Morning everyone, my name is Sakiba Ryan, resident oil trader here at JNF Capital. I'll be looking to give you an insight into our positioning in the oil markets this week. Before I get started, I'd like to let you know that trading in the financial markets is not for everyone. One can lose more than their initial deposit. With that said, those of you who have been trading with myself will know that what I try to do is monitor what the bulls and bears are doing and simply align my clients' funds in the same direction as the entity that is in control of the market at the time. With that said, let's have a look and see what the bears are looking at this week. So what are the bears looking at this week? Okay, for a start, we've got the OPEC meeting coming up on June 5th. Now, in a nutshell, we're not expecting any change from the OPEC members. We're expecting them to maintain status quo of about 30 million barrels. I'm just going to roll that over and carry on producing at 30 million barrels, especially in light with, we're basically, Saudi Arabia has just said that they're not looking to cut production. I mean, they're sticking to their guns on that. They're saying that, the non-OPEC members like Russia and the US are going to have to cut production alongside them in order for them to also look to cut production as well. As you know from my previous videos, the reason for that is they don't want to lose market share like they did back in 1987. Now, the possibility or probability of the US and Russia cutting production is pretty small to none, possibly. I mean, especially with the fact that the Americans just last week printed the highest figure of production that they've had in 40 years at about 9.556 million barrels a day. So, it's unlikely they will cut production. So that is what we're expecting. We're expecting a no cut, so that's fairly bearish for oil prices. Another thing that we're looking at is the dollar. Now, with all this issue going, in the markets regarding the Grexit, the dollar is always looked at as a safe haven. So if there is a flight to safety due to the Grexit, of course, any strength in the dollar is negative for commodity prices, and naturally you should see crude oil react to this as well. Last but not least is the sentiment on the trading floor. Generally, a lot of the traders around do feel that there's an excess of crude oil in the markets, and one of the reasons is Iraq as well. Iraq is currently producing somewhere in the region of about 3.5 million barrels right now. They're looking to bring on a different specification of crude oil, heavy oil, as well onto the market. If that comes online, that's roughly about 500,000 barrels of heavy oil that may come through. There are certain entities that are in the process of actually pricing this product at the moment. Now, if you couple this with the fact that inventories in the products such as gasoline are 10% higher than they were just a year ago, that is fairly significant. That just shows us that the amount of consumption of crude oil may not be as aggressive as it was last year. Now, that of course will reflect. Gasoline is a refined product. It will obviously affect the storage and the capacity of oil as well in storage. So yeah, that's just generally negative for crude oil prices. Let's have a look and see what the bulls are doing. So the bulls are looking at geopolitical tensions this week as well. This is carried on from last week. We had news out of Iraq that ISIS bombed a Shia mosque out there, out in Saudi Arabia. So now these kind of geopolitical tensions, anything revolving around major oil producers is naturally not going to be negative for prices. It's very positive for prices. So that did help lift prices last week, and that sentiment is still in the market. I mean, not only that, but there is also information that ISIS is now about 150 kilometers away from the capital. They have captured a town in the northern part of Iraq, and that is, of course, the fear of production cuts in Iraq due to geopolitical tensions, the fear of troubles, escalations in geopolitical tensions in Saudi Arabia, both due to ISIS. These are fears in the market that are predominant. It's something that we definitely keep a close eye on. We wouldn't want to see any refineries going down because that would lift prices even further. So right now, the major bullish theme for crude oil is geopolitical tensions. Now, another thing that we've been looking at is that, of course, as you know, since last year, with the falling oil price, China has been stockpiling their crude oil. Now, they've reached a point where they're obviously stockpiling into floating storage. China is the largest consumer of crude oil, the largest importer of crude oil, beg your pardon. Now, of course, if they were to, what they're doing right now, stockpiling is looked at, irrespective of the fact that they're looking to stockpile it for future use when the price goes up, possibly sell it, maybe consume it, whatever. The fact that they're purchasing crude oil, irrespective of what reason they're purchasing it for, is obviously indicative of demand. So that, of course, helps lift oil prices. Now, as far as statistics are concerned, we had another draw in crude oil inventories last week, 2.6 million barrels. We had another drop of rig count from Baker Hughes of about, I think it was another 13 rigs went down last week. These are obviously fairly bullish indicators of crude oil. A draw shows you that the production is, the current oil reserves are being consumed. However, this was, like I said in the bearish argument, this was somewhat offset with the United States printing probably its largest print in 40 years of about 9.5 million barrels. So interesting statistics. Some of it is bullish, some of it is bearish, but that's the nature of the market. It's up to you to interpret it, which you feel is the predominant trend and the predominant theme. And that's what we're here to do. We're here to help you understand which one is actually in control of the market, to the best of our knowledge. We combine fundamental news with technical, and we help you trade the market. So how are we trading this market this week? As you've seen, the market has been somewhat sideways for the last couple of weeks. Fairly difficult to trade on an intraday basis. But this is what we're here to do. We're here to help you decipher, look at the market news, sift through all the noise and get to the actual information that is moving the markets. We help you couple that with the kind of technical analysis that we have. So, a little bit of fundamental information. We look for the right trigger points using our technical analysis, and therefore we're able to, identify which entity is in control of the market at the time. Now, just to give you an indication, last week we did one of the short points was triggered on the market, went short at about, I think it was 58.28, and a target of 57.55. If one was to trade this market, you can trade it in several ways. You could go in for 10 points, you could go in for 100 points. It comes down to what your personal objectives are in the financial markets, what you're looking to do. Are you looking to benefit from intraday swings, get in for just a few points here and there, scalping the market? Are you looking to diversify your portfolio and have some exposure to the price of crude oil? The price of crude oil is very aggressive, and one can see massive swings in your equity curve. But that can be used to your advantage as well. If you would like to know more about how trading the crude oil market could be beneficial to you and your portfolio, please don't hesitate to get in touch with us. You can get in touch with myself or my team. My details will be indicated on the following screen. Alternatively, you can follow myself on my Twitter handle, which I've recently started. It's at Orion Oil on Twitter, and I do tend to sometimes treat my followers with a couple of levels that I'm trading live at the time, and sometimes with breaking information as well. Thank you very much. I wish you a profitable trading week and look forward to seeing you next week.